Right. We're getting down in it. And I'm going to show you how the market's being made jagged here on the lows. See all that right there? And all that is just sweeping below the first percent to fair value gap of Asia, which is what this shaded area is. I'll zoom out in a moment, but for now, this is a very aggressive form of reversal pattern, but keeping it very safe in the sense that this high is all I'm looking for. And it's trading inside the range. I don't need it to do this much. Notice that we have this high and this low. I can make all the money I want inside that range. And it need not take out this high if I'm bullish or take out this low if I'm bearish. This is a very, very crucial part of finding consistency, finding your rhythm as a trader, confidence, knowing what to look for, an endless supply of setups. So because I know that there's a near-term pool of liquidity here and then here, this is a primary, this is a minor buy side. Primary, minor. So the minor is too close to where I got in at here. So the next one up would be here. And again, this one need not take out the high of the range over here. So I'm only interested in seeing price run up, take out a very low hanging fruit objective for some grocery money right there. All this little short-term high is all that's required. It's easy to get to that objective. It's not something that's daunting as a task for holding all day long to get to it. So it's a little bit more friendly in terms of duration. So look at this volume of balance right here. Watch the sensitivity in there when price trades to it. So go down here and then violently run after that pool of liquidity there into this inefficiency here, that volume of balance, and that volume of balance, and ultimately up into my limit order, where the rookie sensation ICT will be able to say, well, it still works. So I'll remain silent while it pains through. Just be mindful that it's jagged right now. All of this jagged, 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 jagged. Now it's going to seek liquidity on the other side. Buy side, buy side, buy side. I want you to notice again, in keeping with what I teach, where all of this type of price action, it was stabbing lower, stabbing lower, stabbing lower, stabbing lower. Okay, all of that's been made jagged. Everything's going to become much more cleaner inside of and above this Asian session first presented fair value gap. You have to allow the algorithm to color outside the lines when there's manipulation. Since we're basically transitioning from overnight trading into pre-session New York, this is permissible. This is the stuff that you're going to see this time of day. And then it gets back inside the lines, and it'll use the PD arrays that I teach much more cleaner. See, we went down to that volume of balance right there. Right there. And now spring to this. And then spring to that. And be done. My stop loss is below the low. Here. Another volume of balance right there at consequent encouragement. So when we trade up here, I want to see it use that and then go higher. And again, watching all these little volume of balances as like mile markers. Watch the low that right there. We want to see sensitivity all around in here as support being used as a discount array. It's just dipping back one more time inside the volume of balance, which is why we don't take the stop loss and jam it up real quick. I'm afraid I'm going to get a losing trade. That's not what someone does when they have a viable model and they have experience watching price, studying price, back testing it, tape reading it, and then demoing it for a couple months. There's no panic once you know what you're looking for. And it's okay if it stops you out. Just remove the idea of needing to get to a break-even stop right away, though. Let me put this in the chart because I want you to see it. Volume of balance being treated as a discount array. That's my internal dialogue with it, as I indicated. You want to see it spring back above inside that first presented fair value gap from Asia, which is this shaded area here. You want to see it get back above consequent encouragement level, and then only work inside here and never go back down in the lower half. If you can do that and then muster enough of a run to get above here, in doing so, that validates this long entry as high probability, and this should be an easy objective to get to. I would buy more right there, but I'm going to keep it at 15 contracts. The only thing I'm doing, and this is what you would be doing, is you're studying when price gets to the low of that imbalance that's shaded in orange. Does it have the ability to get to the midpoint consequent encouragement? And if it has retracements, is it moving beyond on a body basis below that volume imbalance right here? And the answer is no. So everything's still saying that it's a viable trade. The stop is there to do its job. Go down to the low, spring above, go above consequent encouragement, and then attack this. Then leave this portion untouched as it gravitates towards my limit order. See that? Volume profile doesn't teach you to do this stuff, folks. Now, in terms of price delivery, what is taboo now is on a body basis, laying anything back below the halfway point of Asia Sessions first presented for Reg which is what I'm highlighting here. So it's completely permissible to do that right there. It's permissible to go down here and touch that little volume imbalance right there, but not leave the body in the lower half. That's crucial right now. You can raise the stop up to the rejection block or thereabouts. And there you go. See how we took that minor buy side right there? And now we want to see it use this volume imbalance, which is inside of now, and then reach for this one, and then have heavy-handed delivery to the upside to snatch that buy side right there. These are trades that go on all day long. I could literally sit here and win Robin's Cup doing these things. I mean, that's the insanity that some of you just can't recognize. Like, these types of trades are bread and butter, and nobody in the Robin's Cup is finding setups this consistently, because just look at their equity. It's all over the place. And trust me, I'm not taking shots at them and trying to talk down to them, because they're out there doing it. But for the folks that just get caught up in the show I give, like, come on, man. Like, seriously, that's an easy task to do what's going on over there. But they use methodologies that are, well, in the truest sense of the word, they are random. They're just reacting to price, whereas I'm predicting and making the market right in front of you. Now we can remove the risk. Lock in a vacation home mortgage payment, something to that effect. I don't have a mortgage, by the way. And then it wants to spring right up in there and go after that buy side. And you're a rock star.